Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 29th. We got a few economic news releases to go over today, so we'll jump right into it. We'll start off with our weekly jobless claims. So last week we had 251,000 people apply for unemployment. Forecast was supposed to jump to 259, and it came in only at 254. So better than expectations, but a little bit higher than last week. This hopefully will be a nice pattern too, because lately we've been kind of in the 260 range, but we've gone down to 250. So this could be, again, still a trend of showing better improvement in our jobs numbers here. Next but not least, it's kind of a big one here. We got the GDP, or gross domestic product, this is the final revision for the second quarter. So the last reporting came in at 1.1%. Forecast was at 1.4%, and it came in at forecast at 1.4%. Now this is lower than we had, like a little over 2% last year. But I also remember last year with the second quarter, it got a little over. It was a little higher than what we would normally have, primarily because the first quarter we had such bad weather in the Northeast that affected our GDP in the first quarter. It was basically negative, and it helped, and all that kind of got piled into the second quarter. But again, 1.4 is still relatively low. So the one thing they're going to be really looking at is third quarter, see where third quarter ends up so look for next month, our first revision of the third quarter, and that's usually our biggest one of the year, and then fourth quarter for Christmas sales and everything else. Last but not least, we got the pending home sales for the month of August. So back in July, we had a 1.2% pending home sales, and that declined by 2.4% in the month of August. So obviously, the home sales dropped. Again, a lot of that is due to lack of inventory. We just don't have a lot of inventory out there, and of course, now we're heading into the fall season, which typically is a little slower than the summer, where families are basically staying put as they don't want to move the kids during school season. So let's go and take a look here at the headline news. Stock market's down a little bit today. It took a huge turn yesterday. OPEC, and this is all contributed to oil here with OPEC. They had their meeting here, and then reports came out that they are going to cap the limit of production in November, which was on the heels on Monday when Saudi Arabia and Iran said there will be no caps. So why is it down today? It's down because now they're having a little bit of doubts, because now there's no specifics as to what this agreement is, and now they're kind of pulling back their enthusiasm after having a huge day yesterday in the stock market. And of course, oil jumped up a bit as a result of that too. Today we have a few Fed speakers having speaking engagements. Comments by them, of course, could make the market a little more volatile depending on what they say. So let's go and take a look at the bond market. In the bond market, we start off a little bit lower. So again, we're starting to get a trend here as going a little bit lower. So as we see here, we started yesterday lower than where we were the day before, and then today we started lower. But as a result of that, a lot of lenders come in with worse pricing than we had yesterday, especially if they didn't do a price for the worst yesterday. As the stock market was heating up, that was taking money out of the bond market. So we had kind of a big drop here yesterday. And then today we're up a little bit, so we might get a price for the better today, as now we're only about 3 basis points from where we left off yesterday. All right, so hopefully, so right now I would basically say that because where we started the morning off, pricing will probably be a little bit worse than where we left off yesterday. All right, as lenders usually want to be a little bit more conservative with their pricing. All right, folks, have a great day. Thanks so much for watching. We'll see you guys tomorrow. Take care. Bye-bye.